Hi everyone, this is Michael Bengiat from Lifetime Investor, and this is the Market Trend Advisory weekend video for September 10, 2022. Here's our disclaimer. You can pause the video and read this. So let's get right ahead started with the trend. So there really wasn't a lot of change from last week. The market trend overall is still uptrend uncertain or uptrend under pressure. Now during the week we did add quite a few market count sell signals based on distribution, and that knocked our overall market count down to 0. And so we have no exposure currently. And that actually raised the number of institutional selling days up to 6 for both of the indexes. And then on Friday, we actually lost one on the NASDAQ just because it moved more than 5% from one of the days. So all in all, the overall picture is just pretty muddy. It's mixed, and it's just a lot of volatility going on, and it's not giving us really a nice clear trend to deal with. If we go to our investing strategies, our market count for the QQQ is greatly beating QQQ buy and hold. And for the SPY buy and hold, we're still doing a little bit better than that with our market count 1x. This red line and hit a resistance right at this green line, which is the 21-day, which is still curving down. And the 200-day is also pretty strongly curving down, which is causing the market just giving it more resistance than it would have otherwise. And volume is still really just below average. So we're just not seeing a lot of power. We're not seeing a lot of institutions buying into this 3-day move here. If we move into the S&P 500, a little bit better. The volume's slightly better. It's still below average, but we did manage to get above the 21-day and the 50-day. Now, because the lows of these days haven't been the low of the day hasn't been above either of these moving averages. We haven't had any market count buy signals yet, but that could come on Monday. So just taking a little closer look at what's going on, you can see that the overall picture is still pretty weak. We still have about 2/3 of stocks below the 200-day moving averages, which is really pretty weak. We're still seeing the 52-week lows just swamping 52-week highs, though on Friday we saw probably the best ratio, 0.82, we've seen since the 25th of August. Of course, now here we have the NASDAQ is now above the 50-day, so this has improved, but it's come down from being up 11.7. It's come all the way down. Now this column, the number of growth stocks that are recent breakouts has been really dropping. Now this column is actually pointing to top stocks that are breaking out and have not broken down 7 to 8% below the buy zone. In other words, that's showing that it's failed. And while this has been going on, even through these last 3 days of the rally, we've seen just a little bit less stocks have been breaking out, and they're not holding. So it's not a strong picture going on here. The only thing I think real positive here is that we've had a couple days of really strong up volume versus down volume. And we like to see if we can get some spikes above 10. That's a real pretty powerful sign right there. But we haven't seen that yet. And just moving on to sentiment, I say overall sentiment is getting a little bit more bearish, which is positive from a contrarian point of view. We've seen now the investors, excuse me, the Investors Intelligence weekly bulls bears is actually equal. So the bulls have come down quite a lot. They were at 45% and they've dropped down to just about 30%. And the bears are the exact same, and they've just decreased a little bit too. So that is giving us a little more of a bearish signal there. And the CNN has been really floating around between fear and neutral. And then finally we have the put call did spike above 1.0, and that is usually showing a lot of excessive fear. So I'd say overall, this is improved from the bulls' point of view because we're seeing more bearishness come into the market. But nothing extreme where you'd say, hey, that's pointing to a bottom. We just haven't seen that yet. So the final thing I want to talk about is, this is the big news that's going to come on Tuesday, is that we're going to see the release of the August CPI, the consumer price index. And one thing that's interesting I just came across is that the Cleveland Fed does what's called nowcasting, and they report that the U.S. inflation may come in about 0.06% month on month, so it's essentially flat for August. And then they see the same model showing September inflation, which will be reported in October, at 0.36% month on month. So while these month on month numbers would be an improvement, we really didn't see, we saw relatively tame inflation in the late summer of 2021, and inflation didn't really spike until October 2021. So what may happen is that on Tuesday, we may see just very flat numbers, which the market may interpret as very, very bullish, though there's a caveat. So it could be something, if it does happen, it may not last, because if we do see this, it means that the headline U.S. inflation rate would still likely remain about 8% year on year, despite month-on-month inflation easing. If inflation remains low the rest of the year, then the year-on-year inflation number would start to come down, as some of the bigger month-on-month inflation numbers from late 2021 would drop out of this 12-month inflation series. So the Fed signals commitment to a rate hike later this month. It looks like it's going to be 75 basis points, and at their September meeting, and there's a lesser chance of a 50 basis point move, but it looks unlikely at this point. So the challenge for the Fed is that though these forecasts may suggest less inflation, they're mainly based on swings in energy prices, which are somewhat temporary. So even if headline inflation comes down, the Fed's going to have its eye on underlying price trends for other goods and services that may be more predictive of where core inflation's heading. So the Fed's not so much worried about energy pricing, but it's very concerned that core inflation remains above 2%. And so that's hard to gauge at this point, and the Fed's going to be pretty cautious in their assessment. So I'd say just all in all, we're probably going to be looking at some pretty rosy inflation reports, especially this August CPI, because the price is going to see the price increases reduced compared to prior months. But I think it's unlikely that this is going to be sufficient for the Fed to back off its interest rate hikes, because inflation still is going to remain well above their 2% goal. So I'd say just be pretty careful what happens. I would not be surprised to see another massive short covering rally come on Tuesday and into the rest of the week. Of course, anything can happen. We just don't know what the report's going to say. But the fact that one of the Cleveland Feds is kind of using their up to the minute data to put this out is going to be an interesting one for the markets. So that's about it for this week, and we'll be back next week, and we'll know what the CPI came in at and how the market reacted. So we'll be talking then. Okay, thanks.